Thank you very much. Yes, you're right. We invested $40.5 million into Johnvents, a cocoa processing business in Nigeria. I think this is within the broader strategy of BII to support the food and agriculture sector. As you know, this is one of the largest GDP contributors in Nigeria. And we do know that smallholder farmers are responsible for the largest production of agriculture in Nigeria. So for us at BII, we do have a number of approaches to supporting the sector. One is really working with businesses that aggregate and support the smallholder farmers. Some of the things that Johnvents is looking to do, because they need to process cocoa beans. To get cocoa beans, they need to be produced. And in doing that, they basically support smallholder farmers, providing them with improved seedlings, agrochemicals, and fertilizers, so that number one, the cocoa trees produce faster and they produce good quality cocoa. And then for Nigeria as a country, as you know, we are trying to diversify away from oil. And Johnvents processes cocoa into cocoa butter, cocoa liquor, cocoa wine, cocoa powder, and they export most of this mostly to Europe. What that does is value addition. In addition to that, it also generates foreign exchange, which Nigeria badly needs. So for us, this is actually quite a major part of our strategy, ensuring that we support businesses that add value and foreign exchange and support smallholder farmers. And not just Johnvents as well. We did something similar with Benson International, which you may know are involved in the cashew and the soybean value chains. They also are adding value and processing raw cashew before they export them to the rest of Europe. So that is really something we're looking to do, and as BII, we will continue to focus on. I think when you look at the financial services space, one of the key focus areas for us is financial inclusion. You can't go into economic activity without access to finance. And when you look at the SME space, for example, you realize that access to finance is one of the major constraints that they experience. And even when they access finance, usually it's very short-term in nature. Generally, banks tend to provide, 1 to 3 years. And sometimes the SMEs need longer-term capital to enable them to be able to undertake, factory expansion, capital expenditure. So there is a huge shortage of long-term capital, in our market. So for us as BII, this is one of the major focus areas for us. How do we ensure that the engine of the economy, the SME space, have access to finance? And that is why for us, we work with financial intermediaries, starting from banks to non-bank financial institutions to fintech companies. And that is why you may be aware that we did extend a $100 million transaction or loan to First Bank of Nigeria for them to on-lend to the SME space. And in addition to that, we earmark 30% of that for women-led and women-owned businesses. And why are we doing that? It's because of what I said. If we don't support the SMEs for productive ventures, they are going to underperform. And all the benefit of creating jobs, economic activity, are going to all suffer. But when you look at in terms of what is going on today, in terms of the environment we are, what you see is that the cost of funds is very high. And when you have that, we've talked about short-term nature of funding available to SMEs. It's going to even get shorter. So you need patient capital. You need flexible capital to support those businesses. I'll give you an example of what we've done in Ghana to try and address that, where we actually funded and founded a company called Growth Investment Partners. Now, what GIP Ghana does is actually complementing the financing available from banks. As I mentioned before, banks will do between 1 and 3 years. So what GIP Ghana is doing is providing longer-term financing to SMEs, and then it's flexible because we design the repayment to mirror the cash flows of the SMEs. So if a business is seasonal, we don't ask you to come and pay when you are in your off-season. And SMEs like that. So we support that flexibility, and the longer tenure we give them is what is supporting SMEs in the market in terms of doing more trade intra-Africa. I mean, you know about the whole African Free Continental Trade Agreement. To be able to do that, businesses need to have access to working capital. And we are willing to support businesses through that. So you look at it as multi-pronged, the approach we're taking, and there's a lot we can do working with financial intermediaries. That's a very, very important point. When you look at the challenges that investors have had in our market, or what the reasons people give for the reduction in FDI into our market, currency is one of the single largest factor. And as BII, we also have to think very carefully about how we address this issue. And there are many approaches that we have taken. For instance, we are generally dollar lender, which means that we don't even be more careful. And therefore, the starting point is we only provide dollar financing to businesses that are export-led. So I talked about Johnvents. Majority of Johnvents production is exported, which means they earn dollars. And therefore, we can lend them long-term dollars because there's a natural hedge that prevent them from currency mismatches that lead to issues. So that helps us. The same thing with Valencia as well. The same thing with fertilizer company Indorama that we've been supporting for the past 10 years. And that ensures that we have this natural hedge. But frankly, that is not enough because the businesses that are earning dollars are actually a smaller part of the population. And therefore, we need to look at what we do for local currency generating companies. And to do that, we also look at different approaches. One is we want to support fast growing businesses. These are companies that they are operating and they earn Naira, but because the rate of growth is significant, they can actually outstrip the rate of depreciation, which means that at the end of the day, on a net basis, you still get decent returns from them. In addition to that, we also look at diversification. We operate across multiple sectors, multiple instruments, and that ensures that on a portfolio basis, we continue to be profitable. But beyond that, we also look at some really innovative structures. For instance, we could work with financial institutions to provide liquidity to a business, and we provide guarantees. Sometimes those businesses, the credit quality may not meet the requirement of the banks. And without us, the banks won't lend to those businesses. But we see the development impact of those businesses. So by providing guarantees, we encourage the banks to lend to those businesses, thereby improving access to finance. Lastly, we also do what we call securitization, where local currency assets, we securitize them and we lend against it. And that way, we can take local currency exposure without deploying dollars. So it's a range of approaches that we take to manage this. But we're hoping that our economies get better, volatility is less, so that we can do more directly using the currency of our balance sheet. Yes, it's a very important question. And I would like to start by saying that, one, we do not know how this is going to end. Various countries are engaging with the US. But I think what this has sort of brought to the fore is the need for businesses to diversify their markets. I think any business not thinking about that now, I think will be in difficulties very soon. The second point, apart from developing other markets, is around improved efficiency. Because if you improve efficiency and you reduce your cost of production, that means that you can be more competitive. So even if there is some level of tariff, but because you are a low-cost producer and you are able to produce at relatively cheaper rate, I think that will help. In addition to that, what we can do is that supporting businesses, improving efficiency. It may require some capex, it may require some process improvement. Those are areas we can provide funding to businesses to support them actually, in trying to reduce overall cost of production. Beyond that, because we operate, across Africa and we operate in Southeast Asia, making connections between our clients, in Asia and those in Africa can also help in trying to diversify markets. So I think we need to think through multiple approaches to do this, but it's not going to be easy. But we all need to sort of adjust to the new world we find ourselves, no matter how this all settles down. I think this is also a very important question. For us as BII, we find the AVCA platform to be really exciting and very beneficial. The first thing it does is that it brings together a lot of the stakeholders in the industry, and you bring them together in one place for a few days. I think the opportunity to be able to meet a large number of people in a very short time in the same place is extremely important. Secondly, like you mentioned, BII is very experienced in this market. In Nigeria, for example, we've been operating for over 70 years. When you've done that, I think what comes with that is a lot of experience. We cherish the opportunity to be able to share our experience with others who are active in this space. And beyond that, also engaging our GPs. We have the opportunity to meet many of them, being very clear with them, what do they need, or what do we need from our GPs? And also answering their question, because sometimes they're not very clear what we are looking for. The platform like this, we are able to engage with them, give them ideas on what we are looking for to improve our relationship and better position them for raising their success. So we find the AVCA platform extremely important, which is the reason why we look forward to continuing to support AVCA.